Hey guys, this is the Discord only talk about. It's for the people that are subscribers to the Discord. So we're going to talk about how to set up the Trading View. Holy crap, am I an old person? We're going to talk about how to set up Tradingview, and this is the part one of using the EMAs. Now, I personally, most of the time, trade with naked charts, but I do use these sometimes on a higher time frame. Well, actually, just one. Um, and that's every once in a while, like less than 5% of the time, if I were to put a percentage to it. And then the other 5 to maybe 10% of the time, I am using them to experiment, to see if they are working and for use for you guys. Because I am pretty good without using any indicators at all, but just because it works for me, I have to realize that I'm going to teach you guys different things, because you can put it into your repertoire and whichever one works. There's so many combinations of trading styles that you can use. It's I want to say unlimited, but I use unlimited in the way that it's uncountable for me to put that there. So yeah, if you guys can get benefit from doing naked trading like this, great. If you get benefit from doing one, I personally still recommend one uh, EMA or moving average. Exponential moving average is what it stands for, which means it just takes like any average, you add up a certain amount and then you divide by that certain amount. So if you got a 200 EMA, for example, you would add up the current candle with the fluctuating price plus the last 199 and then divide by 200, and then that's where your average is, and that's where the price would be. Same thing with the regular moving average. Exponential just moves faster, and since we are more of a scalp group and a fast trading group. Oh, here we go. Look at these dumps that are happening right now. And you can see it faster right here. And this was where Bitcoin had pumped up. It did one of those. And I like to call this weekend fuckery because today's Sunday, um, where it will pump up. It'll make it look like it's going somewhere. And then instead, it will go in the opposite direction. And you can even see it expressed on these altcoins, like BNB that we're looking at right now. So, and I have other screens up. That's how I know what was going on. But yeah, so let's look here. We got the regular trading view. I got the 1, 3, 5, blah, 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 all of these things set up. Pause to see what minute I have. You can go into this setting. You put a star next to it to add it to your favorites, because I think default is just like what, 1 day on Tradingview. That's for a different video, and actually that's just something that you can do easily. It would normally just be 1. For example, let's just take this off the favorites. The 1 minute is gone. I even got the 1 second chart up there. I could put the 5, 15. See that? So we're going to take that out. I got the 1 second chart just because it's kind of funny to have 1 second. But these are typically some good ones. I don't want to put the week on the favorite because I can just manually click that. So I have this one set for 4 students. So this is the one we're going to use going forward in the future. Guys, let's get this in. All right, let's get my voice a little bit higher so we can get some excitement in here. Exponential. So expo. So I use 1, 2, 3. Okay. We're going to change the colors. We go, okay. You notice I went to this FX. I type in expo. Then I clicked on moving average exponential. And here is where we go. We click this. We click next to the eyeball. You can hide it. The settings button, the style. This one is going to be the 5 EMA, so I'm going to leave it to that blue 5. Now, I'm going to make it a little thicker. Where is that at? Okay. I'm going to put it to that one. No, I'll make it to the number 2. All right. In order to get to the 5 EMA, 7 moving average seems to be almost the same or very close to it. So we're we're going to go with that of how that is. Looks like Chainlink is actually pumping right now. It did just hit a new all-time high, so, but it just wiped a whole bunch of people out. This is going to be the 21, and I like to put the 21 as white. Once again, we're going to make that to the second thickness. I actually think I have mine to the third thickness. Yeah, I normally have mine to the third. But sometimes, okay, let's go to the number first, because I always have the number 200. I make that red. Why did I keep exiting out? And that's going to be the second thickness again. Okay. So here we are. See how these are moving up? Now the 200 typically isn't really used as much by me. Definitely not. But it does have some use when you look at these, because these do struggle around the 200 moving average. When it's about to make a big move in either direction, it typically is around the 200 moving average. You can see where these big moves up, big move down toward it. Okay. These are usually toward the 200. Now, if there's a new asset, like for example, it's not 200 days because you're looking at the daily, well, then it will not be able to have that. So it'll move towards something else, the 50 maybe, or something like that. I don't really use those. I don't use these really. And I found out that the 21 was pretty good to predict a lot of these bull market moves. For example, when this got above the 21 right here, did you see how long it stayed above it? And then it struggled right here. It struggled right there, it failed, and it struggled again, and it succeeded around the 200. Because remember, the white is a 21, the red is a 200. You see how it was in a downtrend and it got rejected, although these are quick. This is the daily. You see these same things. Once again, the early predictor right here, it failed a couple times. It tried to go up, but you can also use that as a pattern. These aren't to be used by themselves. You use them in accordance to the pattern that you see. So that's going to be for part 2. I just wanted to go over quickly how useful these things can be. Now, this is the part 1 section where I'm going to show you something. Now, these typically tend to gravitate toward wanting to touch or getting near their moving averages every so often. It's not like they just stay sideways. There's different types of corrections, okay? There's a literal correction, which means you go in the opposite direction of where you were, which is down here. It was going up, and when you're going down, it goes up. Or, but this is pretty hard to see that. Or there's this. There is a time-based correction, which means it will go sideways. On the shorter time frames, it's still going to be touching these and going toward these. But on the higher time frame, it will drag the moving average toward it. As you can see, it stalled right here long enough that this moving, and it stalled right here, and it started to come down, but it stalled long enough that the 200 EMA had a chance to catch up. Okay? So there are once again, two types of corrections. One is a literal correction where it goes in the opposite direction, This was an uptrend correction, okay? And then there's a time-based correction where you would go sideways, as this is more or less sideways, okay? And we can see this. So this lasted from 10 yesterday, according to this clock, all the way to 8 this morning. So let's look at this on the hourly. What was this expressed as? Okay, you see this? It barred it down in this case. But typically, and you can see this right here. Let's change this to a different color. Yellow. Can you guys see that? Why is it coming behind it? Doesn't matter what color it is. I'm going to leave it that green. But you can see it right here expressed itself, okay? And this was a time correction that turned into a literal correction. And so because there was not enough momentum, it's looking for liquidity and so on and so forth. Okay. Now, you see how I just said that they tend to gravitate toward touching it or getting near it. Here it is. It did not get near it. There's a certain nearness, like right here. This is close. This is arguably pretty close right here. Everything else after that is not close enough from my experience. The tips of these wicks at the bottom. So let's get closer. This is close. This is the last close one. And then everything else is too darn far in order for it to qualify for the 21. 21 doesn't get touched as much. Once it starts to get some room away from it, it is flying. That's how you know that you're in a certain trend. You see this on the hourly. If you start to see that this got stagnated, you can then go long with some degree of confidence that you will not get stopped out, but you still use it with your other strategies that I'll go through in other videos. This is just one that's specifically about the EMAs and how the basics of them work. Eventually, this is going to want to come near or touch this and eventually just go underneath it. Just like this tested this, it went over it, failed, went over it, failed. But from here, from this point right here to right here, this was basically going sideways. It did not continue to go further down. If you look at this, this went here and then it went up. That's how you know there's some stagnation. It's a consolidating. This is what this would be called. This is called a consolidation. So you use these things in combination with other things that you already know. You don't just say, well, it got rejected here, it's rejected here, it's rejected here. It's got to go up now because we don't know how many times it could reject. Technically, people could use the Elliott wave theory thing where it says it's 3 waves or whatever it is, or 5 waves up, 3 waves down type of thing. And you can say, well, it just touched it 3 times, so the next time it goes there. But this was a tap, this was a tap, this was a tap. So those are more than that. So what we look for is for it to consolidate. This looked like it was consolidating, but then it broke down and it set a lower low. Then it came up, looked like it was trying to attempt there, went down, did not set a lower low. So that started to look good. Now, here's how we can use these together. And like I said, I'm not going to go full in depth about these, okay? But this is how you can use these together. The 5, let's take this out and just look at the 5 only. Do you see how close it rides the 5? These candles ride the 5. It doesn't matter what time frame you look at. It does not matter what time frame you look at. The 5, the 15, the 1 hour, the daily. These things stay very close to the 5. Other than these huge dunk moves, they typically gravitate toward the 5. So what'll happen is, you notice how these wick down and then they come up, no matter what direction or what color this is. Oh, wow, it is dumping really, really, really hard. This is one hell of a dump right now. Let's take a look at this. This is very interesting. So this is dumping pretty hard. Let's look at this. Let's actually take a look at Bitcoin very quickly. BTC, USDT, and look at Binance for a reference point. Okay, so Bitcoin is taking all of these down. It was green. Did you see how much it was up and now it's down? So Bitcoin did this. I could like to call it weekend fuckery. It went up here. It was a 2 candle, 3 candle pop, and then it dumped against it. These are called air pumps. That's what I like to call it. It's an air pump. It's nothing really behind it. It's here to just fuck with people and to mess them up. That's pretty much what it's for. And so no matter what direction this is, you see that it's staying over it. And then when it's in a downtrend, is underneath it. You can use this in combination with the 21 because eventually this will come up and tap that thing or get close. But eventually it will touch it, and then it'll go in the opposite direction because it'll touch it, it'll test it, and then it will correct. It'll touch it and then correct, touch it and correct. But in the meantime, while it is there, it will touch this or get close to it and it'll drag it. So not every time do these have to touch. Sometimes these can dump far enough down that it will drag the EMA. And so let's look at this in real time right here, how it didn't touch it. But if this dumps far enough, this will wind up touching it. All right, I just got a trade in the background. I'm sorry, guys. I could not resist getting into this and running it in short. I went short chain link right now, and I will go over that. But look, we see this in real time, and this is excellent because this is a lot of move. If we didn't have all like right here, this was stagnating, so that wasn't a good move. And then I bet it's going to be underneath the 200. Yep, and it is. But we're seeing this in real time. And hopefully we get this where it pops up and it touches that. So we can at least see that it does that. And then it goes right back down and rolls over. Or as this is weekend fuckery, it just goes up and it keeps going up. But we can look at this. Now you see that it touches it. It's probably going to go up because this is a potential reversal here, a weak one actually, but still reversal nonetheless. As it goes up, it should tap this and probably overshoot it. No, good thing I closed that. I'm looking at this because I got in so late. I closed it. Let's see. All right. So yeah, this is the good part that I can see that we can view this together. So while we're waiting for that to go up, and this might just wick and then immediately just tank. And on the futures market, which is what we would be trading, sometimes it doesn't even get up that high. It's just that it got satisfied on the spot market and it went down. It just doesn't wick sometimes. It just will go there. Now I like to use a 3 because Binance has a 3, and you can see that it's here struggling at that point. And the same thing will happen here. That actually is not as good as the 5 minute because 5 is standard across other traders. So we'll see that. Let's see, where is this price at? 92.20, which is what here, the 5 EMA, 92.20. We can look at the here, 92.22. So the 21 on the 1 minute, it's almost like the 5 on the 5 EMA on the 5 minute. And you will notice that these EMAs can match up with different time frames, and you can kind of predict where they're going to go. Now the 15 looks like it's going toward here, or this could be as high as it goes and then it just dumps down. That's the part that makes it a little bit harder because we don't necessarily know, quote unquote, when one of these will pop up. But once you get enough experience of watching these, right, you can kind of see, okay, this just did a major dump on the shorter time frame, the shortest of the short. How likely is it to come up here? How likely is it that I get in right here and then I'm able to get out? And is that enough profit for me to get in and out? Is the order book going to allow me to do it? Yes, the price might go here, but it has wicked so fast and the bots got in front of you that they took the profits and you are still stuck in a position before it rolls over and goes down again, right? And now you see that it's gotten close. Now this is close enough to the 21 EMA. This is close enough from my experience. But like I said, likely to touch it because of this on the higher time frame on the 5, and then the 15 wants to touch here. So we're going to see an overshoot more than likely of the 21 EMA, the candle here. Now, we can see that this is an early version of an inverse head and shoulders. Okay? This is what if you guys get good at just certain ones, you don't have to adopt the Head and Shoulders one, because a lot of those are fake outs, and a lot of them will go to about this spot right here. Either a halfway point, which would be, I think, right here to right here. Okay. And then it'll roll over, and then it'll do that because it's actually in a downtrend. But sometimes, because it's bot action, they just complete the patterns. They'll wick the hell up and then go straight back down. Like it'll be like a half a second, and then it'll be right there. So that's just something that we have to pay attention to. I love Head and Shoulders. I don't always pay attention to them because this is the alternative. It'll do this, and then here. There was no other shoulder that was formed at all. It just does that. And we can actually see this potential for Bitcoin on the daily. Actually, let's take in the 3-day so that it's here. We got a, well, this was a Head and Shoulder right here. Wait a minute. That's the weekly. Okay. So you got this here, and then this could easily do that. And that's enough for the shoulder. Although I was thinking that it will go and do one of these or even roll over. But I would think that it wouldn't go down as low as this one, because they don't typically always do that. They go to like, I don't know, 5% or more higher. And this is the spot that it will reverse. But like I said, the scenario that is looking like right here would be that it goes here and does that. Or it could have just gone straight like that, because this is a bull flag. So you notice that the shoulders are bull flags. So when you look at these, you have to put in the context that, okay, if it were to dump, you notice that it's only a few candles right here. This is lasting a lot longer. So because of that, this is less likely of a scenario to happen. Now, in this aspect, that is a bull flag. Now, this is starting to get into a different video, so I'm not going to go too much farther into that subject, okay? But let's look at this very quickly. Now, I just wanted to let you know that you use these EMAs with the patterns that you see, with the volume that you see. A lot of this volume is pretty, especially on the shorter time frames, it can send you off. You would have thought that this volume is good. But where did the volume come from? Did it come from the sellers right here in this tiny section right there? Or did it come from the buyers right here? How quickly did it go up? This was so much smaller compared to here. That's where you can kind of get sent off from. So hopefully somebody's working on an indicator, a better volume indicator that actually color codes whether this was predominantly buyers or sellers or very neutral. That would be the best volume, because if you're not looking at it in real time, then you can't necessarily always see these. Let's go to a different asset real quick, like VeChain. I'm looking at this in the background, and I just want to move on from this for a second. Now, you see this thing? This is a lot of volatility going on. This is forming an ugly one. This is an M right here, and inverse Head and Shoulders right there, with that shoulder being that way, and it would be sideways. So it's already covered its bases. These things go different ways, but that could be looking too far into it, right? So, but like I said, this will come here. It tapped it, is now on top of it, but it went down to tap it, brought it back up. It's struggling here. Let's see how long it's been struggling at the 200 EMA. It struggled here for a while, over almost 2 hours. Here's the 5-minute. It was struggling to not break down, and it's finally broken down, and it looks like it's going up. Now, you see how this went down? There's a certain amount, and then it shot up to touch the 21. Now, with your experience with different assets, you have to learn the one that you're looking at. But typically, the crypto market is very similar to each other. with how it's going to treat tapping the 21, the 200, and the 5. But I'm just letting you know. Oh, wow, this is just a lot of fuckery going on right here, actually. And it's a lot harder to trade VChain right now because it just completed a pattern. Let's look at the 1 hour because I'm looking over here. Now, if I zoom out far enough and it squeezes it, or if I do, I don't know how to necessarily. Okay, but this right here is, you guessed it, a head and shoulders, with the base being right here, the neckline being right here. So this would be a head and shoulders into, I guess, a bark pattern or something like that. And it completed the pattern. Sometimes these things don't stay down that long. They just complete the pattern and then they do whatever they do and then they're off. Which, because it's in another pattern on a higher time frame. So you got to see that it's competing against two different things. Which this would be here, but it will be more than likely to do this. And you notice it bounces off of the EMA. This is why I'm even pointing this out right now. This is still the part one, and I'm about to end it right here. Now you see that when you use these with the patterns, and it's good to just, that's why I said kind of just one would be good enough. The 5, I notice it goes to that so much and so often that I can predict a little bit more accurately now. I drag my screen. I can predict a little bit more accurately now where things could go. But then you have the random price movements. You still have all of those things. So you can't be married 100%. You got to have as the stop losses, or you at least hedge your bets, as in if you go long, you got hedge mode on Binance or another site, and then you're going short to counteract that. So if it does go against you, you could at least say, okay, here, this is what I'm doing. And when it looks like it's going to go long, you go into that. But this is so bot actiony and just so much stuff going on that there would have been no way on the 1 minute that you could have got that. Then it looks like it's going to go down. Then it's up and down and up and down. It's just a lot of wicked price action. So that would be ugly. This is ugly to trade on the very short time frame with the higher leverages. It just is very difficult. Lower leverage like 5 and below, maybe 10 at max. There, but here, 6 hour went down. It was away from it for a while. 1, 2, 3, 4 candles, came back down. Okay, let's look at the 12 hour, and that's a 21. Remember, eventually 1, 2, 3, 4. This is 5 until it comes down here. Eventually, it's going to want to tap or get near. It hasn't been near it in a while. So this is how you can tell, okay, something is going to roll over. Now, I've seen about a 16 or 17 candles that have been far away from the 21. Like these right here. This is the daily candle. This one is the last one that's close. These, I mean, I guess some can argue that it is. I think that's an abnormality because most of these other ones don't necessarily. I guess this in this uptrend doesn't get that close either. So if it's trending, that can make sense that it doesn't get as close as it normally would when it needs to, quote unquote, needs to tap it. I guess you could argue because this is a time-based correction. This was sideways into a bull flag. Because bull flags can go down and then up, or they go here and then up. Two different ways a bull flag can form. If you see something like this, that's not a bull flag. That pattern typically breaks down, but in the crypto market, most of the time it breaks to the upside. In other markets, it does not. So you need to know your patterns for your market. And I'll go into more pattern videos in the future. This has kind of been just the introduction to it. The 200 does get tapped. It just takes a lot longer to get to the 200 because it's an average of 200, as you can see. But When it's above the 200, it's more or less in a for sure uptrend. Because you can see that it did struggle here. It was consolidating. This consolidated to the side. V-chain consolidated to the side. If you zoomed out like this would be a longer bull flag from this point right here. Zoomed in right here. So it's different ways to do it. We can drag and if I can remember how to drag, and I think it's control. There we go. Holding control and then doing this. So if we wanted to see this in real time, like right here, if we want to see this in real time right here, how this would look, because sometimes we can see a different shape that we normally wouldn't see depending on how we zoom or how we inverse the chart to make it look upside down, right? And how this looks like a bark pattern for how that looks like a bark pattern. Like this just completed a bark pattern. That's what it was. It was on the daily, but it completed a bark pattern on the other side of the chart. So we can look at these in a different aspect, because this is not a W. I mean, you can look at this side as a W, but I'd argue that this is more like the bark patterns that we see, because it just pumped up when it did pump up so quickly. And if this was the 1 minute chart, everybody would be like, whoa, 1, 2, 3, 4, 5 days, 5 minutes. And then it just shot up, like skyrocketed from this, which struggled a lot longer right here just to do the same thing. So that's a bark pattern from my perspective. But you use these in context. You saw that when this dumped, it dumped to right here. So if you were not in a short, which is hard to tell when things stop, but if it hovered around here and it started to look like it corrected, I mean, it would not be a bad idea for me, in my opinion, to have gone long and a stop loss at the actual EMA when it touches, or maybe even at the end of this candle right here, because you've gotten in a little early. Now that would have still been a lot of room. Let's see, because you would have gotten in up here. That would have been a 10% move down, a 15% move down. Now, depending on the leverage, 10% move down on 5x leverage, we get you 25% loss. 10x, oh no, I'm sorry, a 50% loss. So 10x, you're 100% loss, basically liquidated. So it just depends on what your leverage and risk factor is. But yeah, that's what we have for now. For that, quickly want to go over. We're going to set a new list. Symbol name for students 2. This is what I was supposed to go through a little earlier. So what we're going to do is we're going to look at Binance futures. Okay. This is what we're going to look at. We see there's Bitcoin, Ethereum, BCH, which is Bitcoin Cash, XRP, EOS, Litecoin, Tron, Ethereum Classic. We look at these and we can list them. We want to list the futures, because that's what we're paying attention to. Since we're using leverage here, we do BTC, USD. And so I'm going to use, I need to go to cryptocurrency. Okay. Where's Binance? Oh, USDT. Binance is the number one. And I have that labeled already. You can, you have to have a paid version to do all of this stuff. Also, I'm going to have Coinbase. Where the hell is Coinbase? Oh, Coinbase right here. So that's USD, not Tether, because it uses actual dollars. BTC, USD. We need to have HIT BTC, because that has the oldest history for Bitcoin. HIT BTC right here for Tether. So this has the oldest history for Bitcoin. If we zoom all the way out to the monthly, it has it from 2000. Really? It doesn't? 2014? Huh. Surely it has something farther than that. BTC USD. Where is it? Or is it Bittrex? Bitfinex? Let's see. Okay, it's Bitfinex. One of these has it from 2011. I can't go into the details there, but you can see that I have that label off too. Then we go for ETH, USDT, and that's Binance. So because I want the longer history, it's because I'm looking at different patterns of how those things look. Okay, that's where I'm looking at these longer history. Binance has only been around since September of 2017, so that isn't giving us the history that we need for Bitcoin. And that's the overall market of where I'm looking at things. Sometimes we have things that have more history and we just put them on there. And when all else fails, you go to hit BTC, which is this, but everything here is Binance. So we're going to be adding in that, and that's what you would put as your list, at least one of them. And some of them, like Chainlink, I think is newer on Binance than it is on other sites. But because it just hit new all-time highs, we can now just say, hey, look, we only need to look at Binance. But before that, we needed to look at other history. Here's one, KNC USDT, which Kyber network. Okay, that's a new addition to Binance. You see, it's only been there since last month. If we use KNC USDT, we can look at HIT BTC and realize that it's been there for a lot longer. Do you see this? That's the difference. Now, the problem with HIT BTC is that the liquidity, look how bad the liquidity. This is on a 1 hour. When you don't see a bar like this and you see like these little specks, this is where the price was bought. But this was because there was nobody in the order book in between this price to kind of push the price up or down. This liquidity is horrible. And just because you see this big wick here, if it's like this on the hour, that means it's really bad. Typically, you can see it on the 1 minute. But just because it looks like this on the hour, even with this wick, if you see all of these things here, that could have just meant that one person had a sell order right here and they bought it, and then another person could have had one right there and they just bought it. Because you can see this, there's one spec during that entire hour. There was one spec that got bought here, one spec that got bought there, one spec here. That means liquidity is bad. That means you cannot buy and sell very good out of this. That means you would be fucked over. But on Binance, the liquidity is a lot better. A lot better. There's still some gaps because it's newer, it's less people trading something like this. You could see some of these gaps, but you don't see as bad of a gap as you see on HIT BTC. So I use HIT BTC for the history, and sometimes the prices don't even change. Like if this moves to the new day, this price could be like this for another 3 hours because there's just like nobody trading it. Or it could be sending you off that it looks like it's higher, but it's not. So I use that for the price history, not much else. Now, HIT BTC still has a lot of liquidity for Bitcoin. As you can see, there's not really any gaps because Bitcoin is Bitcoin. But for other cryptocurrencies, I really just don't trust it for, other than to see the price history. And so that's all I got for now. You would set up your symbol. You can change the color by clicking this. And then you set it here. Oh, they added a new color in. Nice. So I'm going to put HIT BTC as that color. And then I'm going to change this to the Binance color or close to Binance color. So that's all what we got for now. Catch you all next time.